Yeah, hello guys. How you guys doing? I'm super excited to be here again. It's another Wednesday on our episode, my Forex series. Yeah. So I believe you guys are learning a lot and you guys are you're improving your Forex skill every time we host this episode. Yeah. So now, before I proceed into what I have today, I have a huge announcement to make to my knowledge seekers. Yeah, I call them knowledge seekers. For me, I think now let me just have a little bit of talk because let me just have this. Let me just have this. For me, more than money, knowledge is very, very, very important. Guys, I'll tell you one secret today. When it comes to forex, you don't really need much. Just have the right knowledge. Money will look for you. Money will look for you. I was also struggling the way most people here are struggling with raising funds for forex, and I while struggling, I actually should I say I put I put knowledge first. Yeah, I put knowledge first, and I made knowledge my priority. Yeah, and the funniest thing is when that knowledge comes, trust me, money follows. Money follows. The first money I received was $5,000 from somebody that trusts my skill. This guy, what are you doing? Tell the person I'm doing demo. Yeah, are you serious? Don't worry, I'm going to fund you. Yeah. So guys, so that's it. That's just it. So make knowledge your priority. Make knowledge your priority, guys. So I want to make an announcement to you guys, a very big announcement. For some, this December is going to be a dirty December. For people like me, I'm going to be learning. Yeah, I'm going to be learning. I'm going to be hosting classes for people. Yeah, and one of the major classes I'll be hosting this December, and in which I don't want you to miss out. I mean, you in particular, you. I don't want you to miss that class. I don't want you to miss that class because for some, the problem they are always encountering in forex market is not strategy. Their problem is psychology. I will be trashing them out in this boot camp. For some, their problem is not psychology. Their problem is strategy. I will be trashing them out this in this boot camp. For some, their problem is not strategy or psychology. Their problem is finance. I will be trashing them out in this boot camp. I will teach you how to strategic yourself to gain investors, people that will come and give you money to trade. Yeah. Well, without me saying that, so my the plan for the bootcamp is it's going to start on the 15th February, on the 15th February of December. This December coming, 15 to I think 22 or 23. Yeah, it's a week class. Trust me, it's going to be a back-to-back class. As I've said, for some, it's going to be a dirty December. But for some people here, especially you that you're looking at me and you are going to be stuck in class, teaching. According to what I have in mind, I pray it goes that way. I pray I have nothing hindering my way. I want to make we wake up 9 a.m. and we finish the class 6 p.m. You know how crazy it will be, right? Yeah, that is what I have in mind. But I don't know how it's going to be like, okay? And with what I'm seeing now, even the gold master Samuel Tochi is going to be there with you guys. So just you guys, just you. So make sure you click on my Instagram and follow. Click on my Instagram link and follow. I'll be posting the flyer to that boot camp, the criteria, the things you need to do for you to qualify to be in that boot camp. Just a week with me, the forex coach. Yeah, with me. Yeah. So it's going to be just a week, and trust me, guys, it's going to be live. So with me saying that, let's jump into what I have today. Is structure. So everything I'll be sharing today, please should I put a disclaimer to it? Yeah, a disclaimer. It's not my own stuff. I didn't just form it out from nowhere. It's extracts from knowledge I've gained from structure, typically structure, nothing else. Because one thing about structure is not a strategy. Yeah, structure is not a strategy. Just the way breathing in and breathing out is not part of life activity. I would say it's what make you living actually. It's what make you living soul. what makes you alive. Let me put it that way. So it's not an activity that you can say, okay, it's minor, it's major, it's not compulsory, it's compulsory. It's important. If you don't understand the concept of breathing in and breathing out as a human, you don't know how to breathe in and breathe out, you surely die. Okay, so that's how structure is to me. I believe structure is like the spine of the market. Like just as we have spinal cord in human, structure is like spine. So to me, I don't see a structure as something that that is knowledge limited. Let me put it that way. It's limitless. It's not limited. Structure is not limited. You keep learning. If this person teaches you structure, you going to another person to learn structure doesn't mean you're actually deviating from what the person is teaching you. You are trying to refine your understanding concerning what actually makes up the market. Do you get it? So everything I'm going to be teaching you here, they are majorly is what I got from Jeffrey Benson, which is my mentor, which every one of you know Jeffrey Benson. I got it from him, from the one he taught us in live class, the one I watched on his YouTube, the one the one I taught in class, in recording class, in which I later watched. So putting those things together and the extra materials in which I'm able to get from my uncles, my friends, and everybody. So I put all of this together, and that's what gives me this my understanding of structure. So me understanding structure, I learned to apply it. I learned to trade with it. That's it. So automatically, I don't have any single strategy. What I just look at is structure. And the one thing about structure is the structure does not lie. I'll give you some fact that the structure does not lie. You know, it's possible for you to think, like, okay, what makes structure so important that this guy is just mentioning structure? Let me tell you one thing. If any news is going to come out, if any high impact news is going to come out, if you can study your structure on higher time frames, in which I'll be talking about very soon. If you can study your structure on higher time frame, if the higher time frame is telling you the market is bearish, if you go to 15-minute time frame, if any news is going to come out, trust me, the news is going to be bearish. Yeah. If higher time frame you say is going to be bullish, any news that's going to come out will be bullish. Because one thing about news is news actually starts an impulse movement. So I will in the market. Okay, so before I actually deviate into that complex, it's not complex. It's very simple, but it's also very complex. So you just need to have basic understanding of what it's saying. Okay, so let's start with trend. We have three types of trend in the market. We have the uptrend, the downtrend, and the short market. When I talk about trend, I'm not saying trend line. Don't it's two different things entirely. Trend line is a tool used to actually to draw either resistance or support to a market that is slanting down or slanting up, something like that. I'm sorry if that my definition is wrong, but trend is different from trend line. Trend line is a tool, while trend is actually a direction of something. So this can be trend line. For example, now let me do this. Let me do this. This, this, and this. So this, sorry, permit me to do this. Oh, sorry, I'm sorry. Okay, let me just do this. Let's take it from that side. Yeah. So let's do this. So this one here, this one here, this line here, I mean this one now. I mean this one now. This one is a trend line. This one is a trend. Okay, so what the a lot of people misunderstand this concept in terms of when they see stuff like this, they probably they've been trading this trend line for long and they see markets come down, break this trend line, and the market start pushing up, stuff like this, the market is starting to go down. It's a lie. Sometimes I used to wonder. I'm sorry I'll be using Jeffrey Benson as a key example as a key example here. He's my mentor and I would love to talk. I love to talk about him. So sometimes when everybody is seeing sell, Sir Jeffrey will be seeing buy. And when everybody is seeing buy, he will be seeing sell. I later get to understand It's about his knowledge of market structure. He already knows how the markets behave. So Sir Jeffrey might be drawing a trend like this, and the markets break out. All of you are saying this market will start going down. You guys will be expecting them at this point here. Mr. Jeffrey will just tell you that expect an aggressive push-up. And it's really funny, the market will push up. So I get to understand that it is his understanding of structure. So you'll be funny, and I believe it has happened to many people here. You're having this trend line here, and the market just pull down, and you expect the market to just do something, a sort of stuff like this, a lot of stuff like this. Then all of a sudden, the market just starts pushing up. What is missing is your understanding of market structure. It is possible for you to have a market create structure like this, whereas this market is trying to give a bigger structure on the higher time frame. And we'll get to understand that later, okay? We get to understand that one later. So what I do here is trend. This is a trend. And the direction of the market, this is a trend line. The direction of the market is the trend of that market. So it's possible for you to have this kind of movement too, 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 this kind of movement too. Okay, this kind of movement too. So this is a trend line. This is a trend line. First touch, second touch, third touch. Sorry, my touch is not making sense that much here. So this is a trend line actually, but this is the market trend. We need to if you understand this concept first, then you are making progress. If you don't understand this concept, you'll be tricked out by the market, thinking somebody's after you, whereas nobody's after you. You don't just understand what structure is telling you. So the reason why, so let me just so we have this uptrend and we have downtrend, not trend line now, uptrend and downtrend, and we have a sideways market. Sideways market is a market that is doing this, that is these are basic forex stuff that a lot of people don't understand. So they are doing this, so doing this. So when you just see a market moving sideways, just moving within a zone, I'll call it a zone, within an area, stuff like this, within an area like this, As simple as what I'm teaching you is, as simple as it is, you will see the way I actually use it in analyzing this market. You don't need anything. This is just what you need. So let's proceed. So now understanding this, let's go to the more advanced stuff. So let's take a uptrend, for example. Sorry, this is a textbook drawing. So just I will take it a little bit more complex now. So this is a higher high, a higher low, a higher high, a higher low. So what are you expecting after this higher low? You are expecting a higher high. Then after seeing this higher high, what are you expecting? You are expecting a drop to what? To a higher low. So if this drop to a higher low does not happen or does not give you a signal to enter, what are you expecting? You're expecting a break of structure. This is the break of structure. It's not something complex. This is the break of structure that happened here. So we have this structure here. So what is this trying to tell you? This thing is trying to tell you that once price break this structure here, it means price wants to create what? Wants to create a lower low that is lower than the previous low, because this is a higher low. This will give you a lower low, lower than this low. Now, around this point here. So what are you expecting again? Is that the market comes to give you an equal high, or the market should give you what? The market should give you a what? Let me take it. Or the market should give you what? A lower high. Then this is what I call transition. Then the market will start giving you what? A lower high, lower low, lower high, lower low, then stuff like this. This is the textbook definition of structure. So I think I'm able to explain downtrend and uptrend now. So uptrend is when the market keeps creating higher high, higher low, higher high, higher low. Why downtrend is when the market is creating a higher high, a lower low, a lower high, a lower low. I believe you guys get that. I believe you guys get that. So that being said, what about sideways market? Sideways market is when the market is just keep moving within price area, like not breaking one price area, they're not going below price area, stuff like this. So that's that concerned that, but we are not concerned with this one. Once we see this kind of opportunity in the higher on the higher time frame, we'll take advantage of it. And I'm going to show you an example of this. Okay. So what I want us to pay attention to now is, you know, this, whenever you see a market like this on H4, let me draw it very bold now because I want to draw something here that is going to, you know, sound a little bit more complex. Okay. It's going to sound complex. It is not complex, so don't misunderstand me. It's going to sound a little bit more complex, but it's not complex. So the first thing when you open your chart as a swing trader, now I'm swinging, I'm shifting to how you should think as a swing trader now is, where is this market pointing to? Who is winning this market? Currently, whenever you see stuff like this, you should know that this is a bullish market and the bulls are winning. But I'm seeing this kind of schematics on a higher time frame, on daily time frame or weekly time frame. So how do I interpret this? So now notice that the market moves in fractals. What I mean by the market moves in fractals, a candlestick on H4, before that candlestick can finish for me, note that it has caused 4 candlesticks on H1. And no, a single candlestick on H1 has caused 2 candlesticks on 30 minutes and 4 candlesticks on 15 minutes. That's mathematics, you should do it yourself, but it's simple as that. So which simply means, if here is a single candlestick, okay, I'm sorry, let me use this one. If what I have here is a single candlestick, you should understand that on lower time frame, this will be like, you know, hundreds of candlesticks. Do you get what I'm trying to say? So this simply means, even as this market is moving in trends on higher time frame, you will always spot trend in trend on lower time frame. What do I mean by that? I mean now this, you count this as an impulsive movement, and this is a correctional movement, right? This is impulsive and this is correctional, and so we expect impulsive movement, correctional, impulsive, correctional. So now you will note that even in this impulsive movements are usually movements that doesn't have direction. They don't have direction. They don't have pattern. They just keep going up. But on correctional, it's possible for you to find something like this on impulsive movements, but they are not that clean to. They are not tradable. Let me put it that way. They are not tradable. They are caused by major news. News cause impulsive movements. So you can just see a spike up. What should I say now? Like, you can just say spike up like 300 pips, 150 pips, 100 pips. Those are impulsive movements. But you will spot more trends at correctional movements. You start seeing markets giving you stuff like this here. You start seeing markets giving you stuff like this here. So at this point here, note, you should be expecting some kind of news to give you a crazy push-up. Yes, because news caused this major push-up. But before that push-up happen, I will explain some stuff to you that will make you that will validate that thing I said earlier. That if your analysis about trend is correct, you will always know the direction in which the news is going. Do you get it? So that is that on that. So you can see that even in this trend on a higher time frame, if I switch it to a lower time frame, you see that this trend. So let me delete this now, not to complicate this stuff. Let's complicate this. delete this. Okay, good. So now, so let's assume that this sticker line. Let me change the color of this sticker line. Let me change it to something like blue. Okay, this sticker line is should I say is weekly time frame. Is weekly time frame. Okay, is weekly time frame. So now let's take this black line is on H4. Is on H4. Do you get it? So now note that if you now switch to 15-minute time frame, 15 minutes, you will now see that even in this movement here, you see that there is also minor movements. So this is what they call time frame analysis that a lot of people don't know. So you must be able to relate, you must be able to know what is the relation between higher time frame to lower time frame. What is higher time frame doing? Okay, for example, now you're a day trader, you must understand what H4 is doing. So now your understanding of what H4 is doing, where is H4 at? Is H4 at correctional phase? Is it at impulsive phase? Now that understanding of what that H4 is doing is what you will transfer from that H4 to H1. So on H1, you want to understand, even at that correctional phase, even at that impulsive phase, what is the market currently doing? So that's why Jeffrey will always tell you, you study your main trend on H4, you study your current trend on H1, then you go and pick your entry on 15 minutes. As a swing trader, you study your main trend on weekly or daily, you study your current trend on H4, while you pick your entry on H1. Or anyone that shows you more details. But as a swing trader, the lowest point in which you want to pick your entry from is H1. That's the lowest point. If you switch to 15 minutes, trust me, you've turned to a day trader. Or I don't know. So that is that concerning that. Okay. So I believe we all understand this. So now let me now take it a little bit more deeper. So now, okay. Sorry. Hello guys, pay close attention to this rough drawing. I deliberately made this thing rough because this is how you should expect the market. The markets won't keep giving you that definition, that textbook definition of trend. They'll tell you like this. So you have a perfect zone to draw a trend line. No! Market will not give you a perfect zone to draw a trend line. I'm telling you. Your interpretation of what the market is saying is what will help you know what the market is telling you. So now, for example, now, this is what I used to do, and what I used to do starts now. So whenever I approach a market, I'm going to give you, I'm going to take us to a live example, but let me just show you should I say, the sketch of what I do. Whenever I approach a market, what I want to do is, now this market is what? Is going up as a swing trader. Now this will be on either daily or H4. Either daily or what? Or H4. Either daily or H4, or no, sorry, either daily or weekly. Either daily or weekly, sorry for that. Either daily or weekly. So what is this market doing? This market is going up. So let me mark out my structures. My market structure. Number one. So I have this low here. So which means, okay, let me just mark the structures. Let me mark the structure. Let me mark the structure. Okay. So these are the lows created. So that's the reason why sometimes you see, sometimes you see this kind of thing in the market, eh? You see this kind of thing. So
At a point in time, the market will give you a sort of a trend. Let me put it this. Okay, let me do this. This is a trend, right? This is a trend. A sort of a trend. Let me do something like this. Let me do something like this. Let me do something like this. Okay, yeah, this is good. So the market will give you a sort of a trend in which you will say this is the first touch. This is the second touch. So we should expect a third touch here, Abi now. So this is the third touch. So expecting a fourth touch, you see the market will break through this trend line. A lot of people will think it's a sell. You get, all of a sudden, you see the market moving up. I will show you the example of this on GU. It's happened recently on GU, but a lot of people don't understand structure. So me, myself, personally, I fell for it, actually. So when I start understanding structure, everything has start coming alive. So now, before, how do you know a uptrend? A uptrend is a trend that does not break its major low. An uptrend is a trend that does not break its major low. Listen to what I'm saying. It does not break its major low because it is that low that actually formulates that trend. It is possible for the market to break a trend line. That doesn't mean the market has changed structure. That doesn't mean the market is starting to come down. Do you get it? A lot of people, because they see this kind of movement, like the market surge up, a lot. Then the market now start doing something like, sorry, let me do this. Market start doing something like this. They will be thinking this market is trying to create, let's say, an impulsive and a correctional move for it to dive down. Whereas it's a lie. It's a lie. This market is trying to deceive a lot of people. People will be thinking it wants to sell, but it's not selling. The market wants to buy. Okay, because the market is on an uptrend. So as I was saying, so you see this low. How do I know which low to mark? Because the market will give you a lot of lows. The low that breaks this high. So this is the movement. This is the impulsive movement that broke this high. Where is the low for this impulsive movement? It is here. This market gave a correctional move. This is the low, right? This is the high the market gave. This is the high the market gave. Notice which low broke this. Which low broke this high? Which low broke this high? Which low broke this high? It is this low, right? It is this low. So this market, you mark off that low. So another one is, this is a new high. Which low broke this high again? It is this low. Am I correct? It is this low that broke this high, right? So you mark it again. You mark it again. Which low broke this high? Which low broke this high? I think let me start using arrow. So which low broke this high? It is this one. You mark it. You mark it. Which low broke this newly created high? Here. It is this low. You mark it. So until I see the market come out to take out this low, until I see the market come out to take out this low that broke this high, I'm not entering this market for a sell. Rather, I'll be looking to buy. Please, do we understand that? Until I see this market break this low that broke this high, break it down, I'm not thinking to sell this market. I'll be looking to buy. Because what? Because this market will keep breaking its high and not its low. So as it's going, I'll briefly do an example on GU concerning what I'm just sharing now. And I'll take it from the. So this is the new high. Where is the low? This is the low that broke this high. Okay, this is the low that broke this high. This is the new high here created by this low. So where is the low that broke this high? This one. Do we get it? So that's how we keep marking. That's how we keep marking. So let's just take this low is here now. Let's just take this. So this market pushed up, came down. So that concept, you keep following that concept till you see a change in trend. Something like this. a break in this. And this is where it's become a little bit interesting. This is where it becomes a little bit interesting. So now, trust me, what I'm marking here, I'm marking it on the higher time frame, not on the lower time frame. For example, I'm a swing trader. I mark this on either my daily or my weekly time frame. Any other time frame, I'm going for maybe H4 or H1. I want to go and look for my entries there, not on this one. So I'm just marking my structures here. So now, each time whenever I see this market break any of this low, what rings in my head is, oh, this market is about to change trend. But am I entering here? No, I'm not entering here. What I'm waiting for is, for every impulsive move, there must be correction. And the best way to enter a trending market is at the correctional move. Whenever the market is trying to behave as if it's going against the trend, that's when you enter. So what I do is this. So now, I will expect this market to give me a sort of a retracement. A sort of a retracement. And don't forget what I explained to you earlier. So that's the reason why I'm saying this thing is in parts. You must understand market structure very well. So now, as this market is giving me what? A new what? A new high here. For no reason should I see this market comes to break this one. If this market breaks this one, if this market breaks this point, it simply means this market is not ready to tumble down. It's still going up. Get that concept. That's the reason why you don't want to enter here, because you don't know if it's just a fake out coming to take people's stop loss, then start pushing up. So you want to see the market push up to almost this point here and start tumbling down. But how will I know when to enter here? This is now when you will now switch to a lower time frame. For example, H4, H1. What are you looking for? Market moves in fractals. Market moves trends in trends. Okay? So on this correctional move here, you want to see stuffs like this. Just as I've explained earlier. Stuffs like this. Let's take this. Okay, I think this is more beautiful. So let's take this. So on this correctional move, you want to see stuffs like this. Interpret this stuff like this. This market, automatically, you've already had the knowledge that this market has broken a major low or a macro low. What I mean by macro is something big. What I mean by micro is something small. This market has broken a macro low on a higher time frame. So what are you expecting? On this correctional move, you want to see a break in low. So what I mean by that is, as this market is creating correctional move, you also see that this market is breaking its highs. Which low broke this high? So this low. So for no reason should I see the market break this low. Which low broke this high? It is this low. It created a new high here. For no reason should I see the market break this low. So which low broke this high here? Which low broke this high here? It is this low. It is this low, right? So for no reason should I see the market. Oh, sorry, I should use a black stuff. Shouldn't use that. For no reason should I see the market break this low. So this is the new high. Okay. So what I'm looking for on my entry time frame, I want to see this market break its low. So this is the recent low created in this market. So I want to see something like this. I want to see this market coming down to this stuff like this. To break this, after breaking this is a mighty confirmation that this market is ready to start an impulsive move downward. So I can safely have my position here after the breakout. and my stop loss will be somewhere here, and I'll be targeting to hold till the market is change trends again. I believe we understand this concept. So let's go to the chart and let's practicalize everything I've been talking about. Okay, so the first thing we'll be doing is GU. Yeah, GU. So I would love to take GU from another perspective. Let me use under thing, because this is my playing ground for GU. So let me use E8 cap. I said it's cap. So let me see if this guy. These guys are having a lot of gaps in their stuff. But let me delete this drawings. So okay, good. This is my weekly time frame. Please, guys, pay a very close attention to this. This is my weekly time frame. We can all see at the beginning of this year, if you are on Sir Jeffrey's YouTube page, is it YouTube? Yes. If you are subscribed to Jeffrey's YouTube page, you will see he explained it. I think he did a video that GU is tanking, and he explained that we should expect some correctional move before a tank. So if you are, this is the weekly time frame. So you tell me, you agree with me that this is a high, this is a low, right? This is a high, this is a low. From a swinger perspective, please, I think that is very, very essential. This is a low. I mean, this is a high, a low high. So lower high, high, a lower low, high, a lower low, high, a lower low. What the market did here was created an equal low, and this was due to the what's this now? I think this is coronavirus. This is 2020. Yeah, this is coronavirus stuff. So the market now created a what? The market now created a what? A lower what? A lower low. So what are we expecting here as swing traders? We are expecting a lower high, Abi. But because we are expecting, that doesn't mean we enter anywhere. So the first thing we need to do is understand what the market structure is telling you. Now realize I'm not drawing any trends now. I'm just trying to understand what the market is telling me. And this is on GU. This is on GU, okay? So now let's go to daily time frame. Let's go to daily time frame. So okay. So if they ask a blind man, what trend is this? You should know that this is an uptrend, right? This is an uptrend. So to mark out the structure, this is a low. That's what I always tell you. That textbook diagram that we drew for ourselves the other time is a lie. Eh? This is the real thing. This is the real thing. So this is a low. Why am I saying this is a low? Why am I saying this is a low? This is the lowest point in this market recently. This is the lowest point in this market recently. And which low broke this high here? Which low broke this high here? It is this low. So this low created another high for us, which is this one. Which low broke this high? It is this one here. It is this one here. So now the market starts waving up. So this is what I'm talking to you about. This is what I was actually telling you guys. So please notice something that happens. Notice what happened here. Look at this market gave a structure here. The market gave a structure here. Market gave a structure here, a high here. So to me, if I'm asked, which low gave birth to this high, I'll pick this one. Jejely and worry, I'll pick this one, because this to me is an impulsive movement. It's an impulsive movement. So I'll pick this low. But notice, after the creation of this high, the market comes to create a low here. And okay, so The market came to create a low here, and this low was broken here. So what should we expect? We should expect a correction now, because this is a break of structure. For we swing traders, this is a break of structure. We should expect a correction now here. We should expect a correction now here, especially after this has given us a double top. We should expect a correction now here. Then the market should tumble down. But let me now show you what happened in that structure, in this structure here, that doesn't give a space for entry. I think let me change this color to something that, okay, or let me just make it blank while I change this to black, so that we can capture that box. Okay, I think it should be here. It should be, let's do it. I think to this point. See, the point is broke out actually, so the point is broke out. So let's do it. So let me make it a little bit more slightly capture. Okay, beautiful. So now let's go to H4. Let's interpret. Now, how is my replay function is working? This would have been lovely. No, Admin, let's assume we didn't see this part. Let's assume we didn't see this part. Let's mark out the structures here, because now after this market broke this point, me as a swing trader, I'm expecting this market to give some kind of, probably something like this, just as the way a lot of people will be expecting something like this, and a stuff to the downside. I mean, that's what everybody will be expecting. So let's go to our H4 and let's break down everything that happened there. Where's our box? Where's that big box? Oh, will I be able to find it now? Okay, now I think, okay, let's go back there. Let's go back there. I think something is wrong. Maybe it's my setting too. Okay, beautiful. So let's go to H4. Yeah, so can you guys see the structure I marked? So this is the place we are talking about. So all of a sudden, it start coming to life. Everything start coming alive. Now see what happened here. Let me mark out the structure. As I'm marking out the structure, please follow me. I will explain as I'm marking, once I'm done, I will explain the structure. Yeah, so I believe this is well explanatory. So notice so after this break of structure, of major structure here, we are expecting to see should I call it, sorry, just a second please. Sorry. We are expecting to see a break of structure to trigger us for entry. A break of structure to trigger us for entry. What do I mean by that? So as this market, I didn't mean that as this market is moving, all of a sudden, at somewhere around here, the market just broke this point. Do you get it? This is an entry for us. But notice what the market did. A high, we have a low. The low that broke this high was this low. So this is the low, this is the high. The low that break this high was this low. This is the high. The low that broke this high was this low, right? The low that broke this high now. I mean this one now. This one is this low here. So the market broke it, came back. The low that broke this high, it is the low that broke this high is this low. Notice I don't mark this structure. Do you know why? This is the reason. These are what I call macro structure. I say macro, microstructure. Understand this concept. Let me zoom in. For us to understand. This is not a strategy. This is you understanding what the market is telling you. If you can understand what the market is telling you, that is all. And I will show you one concept very soon. So now, see, this low, okay, this low was the one that actually broke this high. If you take a clear look at this high, you will see that this market was broken here. Even before this spike up, this week up, this market was broken here by this week, okay? So now, the market tumbled down. That's why I didn't mark that. So automatically, this market didn't break any high for me. It didn't break any high. So I only want to see major structures, okay? Major structures. So this market can be broken. So far, this market didn't come to break this guy here. It is still a buy for me, okay? It's still a buy for me. And I'm going to show more examples concerning that. So now, the market keep pushing up. Can you see? As we are looking to trade the correctional move, there is no entry for us, which indicates that this market wants to keep going up. So a lot of people, even at this zone, as this market got to this zone, a lot of people are looking to short this market. But notice what the market keep doing. The market keep breaking its high. The market never break its low. See this low here. It came close, very close to it. It didn't break it. It did not break it. Look at this one here. Very close to it. It did not break it. Very close to it. It did not break it. Why? Because the market is what? Is bullish. Because the market is bullish. But notice what happened all of a sudden. So now, this was the low. To me, I would say this was the low that led to the break of this high. I love to take my as that. Some people can check in for micro trends, but I would love to take this low, this one here. Let me zoom out now. This one here as the low that broke this high. So which low broke this high? Which low broke this high? I think everybody can spot that now. It is this. It is this low. It is this low. Okay? It is this low. It is this low that broke the high. So then, as the market creates, so now the market created a new high. Though I don't like doing this one. But I'll have to mark it, okay? This high was broken, and before which low actually broke this guy up? Which low broke this guy? So it's this low here. So as this market broke it down, we are expecting a retracement, okay? But for me, I won't count this. This break here as a break, because it happened here. So and it turned up. So that's the reason why you don't even trade a break straight up. You don't say because it has broken, I trade. No, what I want to see here is I want to see this market as it tumbled down, as it broke this place. I want to see it push up, then tumble down, then start going down. Even as GU is, I'm looking to short GU. Because GU has broken some major structures I'm seeing. So what I'm just expecting, just as I explained, a push up and a correctional push up before a turn down. So until I see break of structure around here, I believe this now makes sense to everyone. And I say a break of structure here I'm not selling. I'm not selling. Okay. So now let's mark the recent structure G is creating for us. So this is what I'm saying. So this is what I'm saying concerning trend. So now, can you imagine at this spot here? At this spot here, imagine someone trying to trend line works perfectly. I would sincerely, but when you understand structure, you'll be able to make should I say full potential use of your trend line. See, imagine someone trying to put a trend line here. Okay, it worked. First touch, second touch, third touch. So the person will think this is a breakout. Where should we be going? We should be going down. Whereas the market hasn't broken any structure yet. Do you see that? So you can take first touch, second touch, at your third touch. See, this is what Jeffrey is always saying. See, what that my mentor is always saying. It now start to make sense when I start understanding market structure. When I start understanding market structure. See now, as this market broke out, Sir Jeff will tell you, if the market gets to this point, I'll be looking to long. I'll be looking to long. Okay, it sounds like magic, but I think this is the trick is having at his sleeve. Okay, this is the trick is having at his sleeve. Understanding of market structure. So now, this market actually shifted the trend line. Okay, so the market broke it out again. You will think this is actually a real breakout, whereas it's not. You see, as I keep changing the trend, the market still keep going up. But if you understand structure very well, you will know when to take decisions. Okay, so so the current market now, I believe everyone can mark out this structure. Everyone can mark out this structure. So this is the high. Let me just mark it out for everyone. So this is the high. Okay. So to me, I'll take this as a low. Which high broke this low? It is this high. Hence a lower high. Which high broke this low? It is this high. It is this low. It is this high. Which high broke this high created a low for us? Which high broke this low? It is this high. It is this high. Okay. So this high created this low for us. Which high broke this low? It is this high. So currently, what are we having? Now we are oh, this is interesting. Now listen. If I will be trading GU now, do you know what I will be doing? If I want to join this cell, but I don't want to join this cell yet because this movement doesn't look like a clear aggressive cell for me yet. Because there are some things I'm seeing now that it doesn't look the cell does not look aggressive yet. I'm still expecting a push up, then down we go. So look at this here. Now a low, a lower high, a lower low, lower high, lower low, lower high, lower low, lower high, lower low. This is a what? The market wants to create what? A lower high to give a what? A lower low. It's as simple as that. So if you understand this structure, even without any indicator, you yourself can know where the market is going to, and you can actually follow the market. Let me now show you what I'm showing you about what I'm telling you about structure. Now, look at this sell that is about to happen, this lower low that the market wants to create. That's if it's going to create this lower low for us. Let's go to let me go to 1 hour. Okay, let's see this. Okay, let's see this. So, okay, it's not very clear here. So let's see this. Okay, let me do this now. The market moves in structure. This is what I'm saying. The market moves in structure. If you are to mark this one, I don't want to complicate things, but I also want anybody that lay his or her hands on this video, I want them to be able to understand what I'm talking. It works just from higher time frame to lower time frame. Just keep breaking down that same thing you are doing on higher time frame to lower time frame. It's as simple as that. So I won't mark this one now. This is a low. It broke this high, low, low, low. Notice that the lows, the retracement this market keep giving does not break its low. Till the market broke this low, then the market start tumbling down. Do you get that? Until the market broke this low that gave birth to this break, this low that gave birth to this high, that did this high here, that broke this high here, the market start tumbling down. But that's not what I'm doing. I'm here to address swing traders. Okay, so that is that for GU. I believe you all understand everything I've said here. And I hope it's not complicated because I don't want it to be complicated at all. So same thing. All you just have to do is look for a good trend, then flow with the trend. Okay. So let's do another thing, another pair entirely. Let's do another pair entirely. Okay. Let's do another pair entirely before I end this video. Okay. Let's do this. Let's do this one. Let's do this one. Let's do this one. So I want to use a different okay. Let's do the test. Okay. So this is on weekly time. This is on daily time frame. This is on daily time frame. I love what I see on daily time frame. Also, I don't like this chart. There's a lot of gaps. I don't want gaps. Okay. Okay, let's do forex.com. Let's see if there's a. Okay, I think this one makes sense more. I think this makes more sense. Okay. This makes more sense. So if we are to take it from this point, let's start from this point. Let's mark the structure from this point. Let's mark the structure from this point. This is a low. This is a low. Okay. So this was the high that broke those low. So the market gave birth to this what? Gave rise to this low. The market gave rise to this low. So which low broke this low? Which low broke the which high broke this low? Because now I think we can spot that we're in a downtrend. We are flowing down. So now I will show you how I relate this to to the current market chart. So it was this high. Note that the market never break its high again. It can move close. It will never break it. Once you see the market is breaking the high, just know that something is wrong with the market. Maybe the market is trying to change trend or something significant is trying to happen in the market. Okay. So this is on daily time frame. Okay, yeah. So let's go. So this low gave birth to this what? This low gave birth to this low, I think. This. So we can see that which low broke this low created by this high? Which low broke this? Which high broke this low created by this high? You will notice that it is this guy. You can pick either this one or this one. You can use this. You can also use this. You can also use that one. Okay. So which low broke this? So it was that one. So this is the high. So which low? So now what I want you to start noticing is, see this from low to high, for a downtrend, from high to low is an impulsive move. From low to high is a correctional move. From high to low on a downtrend is an impulsive move. From low to high is a correctional move. From high to low, impulsive move. From low to high is a correctional move. From high to low, from this high to low is an impulsive move. From low to high is a correctional move. From this high to this low is an impulsive move. Even though we can spot some trend here, but what we are trying to do now is like mark out the major structures. The major structures. If you notice, I'm not catering for the micro structure now. I'm just catering for the macro structure now. So now this is the impulsive, this is the impulsive move. So the low created by this impulsive move is this. You might be wondering, why am I saying this movement is not an I'm not parting it that to say like this is a high, this is a low, this is a high, this is a low, this is a high, this is a low. No, if you trace this market from this point here, this is the high this market gave. Let's just assume this we're not having this. Let's assume we're not having this. Let me delete these guys. But I believe we understand that concept. So this is the high these markets give. This is the low. This is the high. This is the low. So this is the recent low this market created here for us. So we are expecting to trade the retracement. We probably retracement. So let's keep moving. So until we see price break this point here. Let's delete this guy here. Until we see price breaks either this point or this point. But so far the market is breaking lows. It should break this point. Until we see the market break this point, whatever we have in here, whatever we have within this range, from this point to this point, from this point to this point, is part of the correctional move. So any move that breaks it down will be counted as impulsive move. So can you see the market keep ranging within this box? It didn't break this high, it did not break this low till it broke it here. So this all movement here, this all movement here is regarded to as what? As an impulsive move that broke this point. So an impulsive move. So see, as I marked out this point, notice even if I mark this point alone, not even this point now. Okay, let me even delete this one. If I mark this point alone, because this is the high that broke this low here. If I mark this, the market didn't come to take it again. The market should never come there again. Should never, on no occasion, come there again. So now, which low did this point give to us? The market gave us this low, and which high broke this low? Was this high? Was this high? So the market keep pushing down. So till we have this it was this, the low that this high created was this one. Which high broke this low? It was this high. So the market gave us another high here. Market structure works like magic. Once you understand it, you'll be able to catch 500 pips. 500 pips. Now imagine, this is just the understanding of structure. If you now incorporate what Jeffrey is teaching us into this, jeez. And that's what I've been using. So notice this high only came close. It did not break that high. So this was the high that broke this what? This was the high that broke this low. This was the high that broke this low. So till this market broke this high, till this market broke this high. Do you get what I'm trying to say? Till this market broke this high, we've always been in a downtrend. Do you get it? Because the market never broke what? Its high. The market never broke its high. Okay? The market never broke its high. So after, with me saying that, let's look at the current market. You can agree with me that you will mark this as the lowest point in this market, lowest point in this market. You count this as the highest point. So look at this retracement we are having. So me, I'll count it as this impulsive move. I'll count this as the impulsive move. While this will be our retracement. Okay, this will be our retracement. Okay, So with me saying that, so let's mark the structure here. This is the high that broke this low. This is the high that broke this low. This is the high that broke this low. What are we expecting? We are expecting this market to what? To give a low, a low, then a retracement if it will continue this kind of movement. Oh, a retracement up, then it will bounce down again. And don't forget, if we have this kind of, okay, for those that do channel, for those that's the reason why I love Jeffrey's mentorship. You know, he allows, even if you trade whatever you want, shall come. Forex is not about strategy. It's about what you understand about the market. So imagine for those that trade channel, okay. As Jeffrey always say, your strategy is just 10% of the whole thing. The main cocoa gun is you understanding trade management, risk management, and money management. If you can understand that whatever strategy you are using, so why the strategy is profitable, you make money from it. But understanding structure will help you, you know, help you use your strategy to its full potential. You get that? So what are we expecting? The market should come to this point here. This point here, then up, then down, like that. Can you see sweet trades? Very sweet one, sweet trades. So that's that on that. I believe we all understand this structure. We understand this structure. So for someone asking, how do I enter? So this is on daily time frame. Let's go to H4 and let's do our entry. Let's do our entry. So now we all understand that. Okay. So let's look for our entry here. Let's look for our entry. After seeing the break in this major structure here, so I want to look for how can I enter this market. Notice, look at this trend. First touch here, first touch, second touch, third touch, a break downside. After the break of this guy, after the break of this structure here, after the break of this structure here, after the break of this structure here, we have this. First touch, second touch, third touch to the downside. Look at this one again. First touch, second, third touch, came back, retest downside. So what are we expecting at this point? So in fact, I want to use this move, this one that is about to happen, and I'm going to post it. I'm going to share it to you guys. This one that is about to happen on this one, this current chart. Because after this impulsive move, I expect the correction. If I see that correction forming like this trend line, I'm going to use to pass an account. So just structures. And notice, if you actually, because of my time, I don't actually want this class to be that long. Because of my time, if you actually break down the structures in this trend line, you see it keep creating higher highs, higher low, higher. The time it breaks is higher low. It's higher low. It starts creating lower. Okay, let me just do it. Okay, let me use it. Let me use this one. Okay, a low, a high, a lower high, a higher low, a higher high, a higher low, a lower high here, a higher low here. The market broke it. A lower low, a lower high, a lower low, a lower high, a lower low, a lower high. Till it got to this point. A lower low, a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, like that. Sorry, let me. Till it broke it again. See, when you see after this break here, once this break here happened, At this point, the market did a sort of retracement, then it starts dumping down. So see what happened here. A low, a higher low, a higher low, a low, a higher, a lower high, a lower high. This is a lower high, a higher low, a lower high, but higher. Okay, a higher high, higher than this low, a higher high, higher than this low, a higher. Sorry, let me start again. A low, a high, lower than this high. So create a low higher than this low, giving us a higher low. Then giving us a high higher than the previous high, a low higher than the previous low, a higher low. Like that. Higher low, higher high, higher low, higher. Till the time this is the low, give us a high, a equal high with this, almost a equal high, but it's not up to that high, you understand? So then the market broke this low. Then the market just did the retracement, then the market tanked down. Okay. So that is that for that. I think that's that for that. That's that for that. So okay, how I wish I can share. I took this trade. I took this trade, I took this trade around here. I took this trade because of this understanding of structure. So what we'll be doing now is at this point, okay, Raymond, I'm now here. I want to take this buy. What should I be waiting for? Wait for this. The market should, maybe probably keep tanking down, then give this high a higher low. Listen, a higher low, then a higher high, then a higher low. See this formation, go for a buy. The buy will be short, then wait for this kind of breaks in low, then you go for a low again, you short again, till we see a very strong break in this guy. Then we know that the market is ready to start to continue that trend is giving us. This trend correction. Do you get that now? So that is what. So the earlier explanation I did, that theoretical explanation I did, so this is when it starts to make sense. So you now see that this movement, as it's moving in waves, it's even in a correction to give birth to a what? To an aggressive push-up. Do you get that? So let me do one more example before I end this session. So the next session we are going to be having will be to talk about advanced stuff on swing trading, like how to calculate your risk management, how to use a swing trading to pass an account, how I've been able to, the FTMO trials I've been doing, how I've been able to, not breaking my daily drawdown and trading these, how I hold my trades. Because one thing is this, concerning swing trading, you don't need 4 moves. You don't need to trade every day. You just need that one move, just one move. But how you keep adding positions to it is something I've sat down myself and I've figured out, and I believe it's work. It's work. So I'm willing to share it for free to everyone. So far as Jeffrey allows me, I'm going to share it with everyone. So let me just do last example before I end this class. I think it's getting too long. So let me just look from my watch list. Okay, let's just do. Okay, I think I don't have. Okay. Okay, let's do gold. Let's do gold. I don't trade gold, but for those that do gold, let's do gold. Let's do gold. XAU. Trust me, what I'm doing, I'm not giving out strategy. I'm telling you what you should know in Forex market. This is not a strategy at all. This is what you should know. So you should indicators. Let me tell you one thing. Indicators lag. The last class I did, I did a class on Saturday. So maybe probably I will share the class if you're willing to actually have the class. We actually analyzed. We took this trade. This trade is actually like, I don't know, maybe 300 pips. I don't know how to calculate pips on gold, but maybe 300 pips. So I actually sent out this trade to these guys, and they took Mr. Y. Bear with me, witness. He took this trade, and all we did was structure. But before I start up here on the let me look drawings. So let's go to weekly time frame. What is gold telling us? Listen to what the market is telling you. So what are you having here? What are you having here? What are you having here? So gold has been bullish. Woo, gold has been bullish. But I'm not concerned with what has happened here, though, as technical traders, we use historical data to analyze the futuristic what's it called, expectation, realistic expectation. But let's just start from daily and let's see if we can get some. So let me start my stuff from here. So I can start from here. Okay, let's deal with, okay, I love this. I love this. This is a transition from a bullish to a bearish to a bullish stuff. So let's draw structure. So I want you to do something for me now. I want you to pause this video and mark out the structures with your eyes, if possible. Just mark out the structure with your eyes before I do the marking of structures, okay? So, oh, I said you should pause the video. You're still looking at this video. Pause this video and do this thing. Mark out the structure, okay? Mark out the structure yourself, okay? Yeah, I believe you do that, actually. I believe you do that. So let me just mark out the structure for you and so that we can see. So this is the eye. This is the eye. Then, so this is the this is the so this is the eye. This is the eye that gave this low, okay? That gave this low, okay? Which eye broke this low? It's this eye, right? So this eye gave rise to this low. Which eye broke this low? It is this eye. This eye broke this low, right? Which eye broke this? So this eye gave rise to this low, right? Okay, so which eye broke this low? It is this one. A very neat, smooth, and so that's that. So this was the low. This was the low. Notice when transition is about to happen, the low was not broken anymore. The market just almost just tested, and started going. So now what do you notice here? This is a structure. This is a structure. Notice what happened. The market broke this point, right? The market broke this point, this point. So now we are having this low as our low now. So this was the low that gave rise to this break, right? This was the low that gave rise to this break. So the markets keep breaking. So this low gave rise to this high, right? Right. So now this low, this low was the one that broke this high, right? So this is it here. Okay. So where are we? The question now is, where are we? I'm asking you yourself, where are we? Are we not in something like this? What happened here? Is it not what we should expect here? It's as simple as that. As simple as that. So getting to understand, for those that are day trading, because that's the reason, that was why I gave out the analysis that you saw, that the one that you see me doing, that marking of position, stuff like that. So that was the reason I gave the analysis. For those that are day trading, how can they take advantage of this? Go to H4. Go and see more clear direction of where the market is going. So now, currently now, we can see that this market has changed its trend. For example, now we can see a clear break of this structure here. Because let me, you can mark this structure yourself now, or let me just mark it again. Let me mark it for the sake of my people. Let me mark it. So, this is a low. The market never comes to break that low again. This is a low. The market never comes to break that low again. This is a low. The market never comes to break that low again. This is a low. I'm just marking lows now. There are some that are irrelevant. There are some that are relevant. I'm going to just delete them right now before some that are okay. Okay, so okay. Oh, thank God I did this. I did this. So um this was the low that broke this eye. This was the low that broke this eye. Um okay, let me use this now. This was the low that broke this eye. This low broke this eye. This low. Okay, it wasn't this low. So it wasn't this. It wasn't this eye. Okay, it was. Okay. This was the low that gave rise to this break actually. So all these ones. This is the low that gave rise to this break of structure here. So this low broke this eye. What the market did, the market actually came down a bit. Came down a bit. You notice something. This is what I was. This is what I was saying. Like after the break of structure here, you don't enter. And I will be talking more about entries. I'll be talking more about entries once I will be if I will be hosting this class again. I'll be talking more about entries. Now I'm talking about structure generally. I'll be talking more about it because I will make you realize something that even the M pattern that Sir Jeffrey always talk about and W pattern that Sir Jeffrey always talk about is still within this structure of a thing. So what is Sir Jeffrey trying to tell you with this? Sir Jeffrey is trying to tell you that now this market is being bullish. All of a sudden, on 15-minute time frame, it broke this structure. You will notice that, okay, oh, I wish I'm having much time, but okay, You will notice that this structure that you're just seeing as a minor W or a minor M on 15-minute time frame is a huge structure on 1 minute time frame. So the market is breaking this structure and reversing up after the break of this structure and breaking it again. You get that? So even Sir Jeffrey will tell you that you don't just enter. You start studying candlesticks formation. How candlestick is pumping up, pumping down. So for day traders, you study candlestick momentum, candlestick movement. For us, we study the printing of candlestick as swing traders. Do we get that? But I won't be talking much about that today. So I'll just be talking about structure generally here. So now see this structure here. So the markets broke it down. Notice what I always tell you. You won't take a retracement until you see stuff like this. After this breakdown, the market start moving up, and in this moving up, on my entry time frame, like maybe probably 1 hour, I want to see something like this. This moving up should be like this, and all of a sudden, I want to see a break, a M pattern. Can you see now? A M pattern. I want to see that pattern before I actually go for a short. This is gold, okay? So the pattern works on every pair, okay? Every pair. So now, see this. So now, this structure didn't give me that pattern I'm looking for. Hence, it came to break this what? The market comes to break this high here, indicating that it's not yet done with that uptrend. So where is the recent low? This is the low. Until this market breaks this what? Until this market breaks this low and gave a retracement back up. That is when I should what? I should be looking to sell them, okay? To sell them. So that's that concerning that. So now, after studying this structure, let's now come to this main structure that is happening here. This is the main structure that is happening here. If you are to, I want you to do something for me again. Let me delete this one. It's making my chart look very messy. I want you to pause this video. You know that this is a downtrend. I want you to pause this video and mark out the structures here. Pause this video and mark out the structures here. So I believe you paused it. Let me just hope you did. You did pause the video. So this is the high. This is a low. Which eye broke this low? It was this one. You can mark this one, you can mark another. But me, I prefer choosing this one until I see the market break it too. These guys these are minor structures. They might be deceptive sometimes. So this market broke this low, right? This market broke. So it was this high that led to this low. So which high broke this low? It was this one. Let me use this now. So now, where are we currently in this market? This market is trying to create a low for us. It's as simple as that. Let's see, once you understand structure, knowing what to do, knowing what to expect in the market will be very, very simple for you. And I believe with this little explanation of mine, I've been able to actually explain and expose some of the things I've studied in the market to you guys. Please, I want you guys to study. Don't just listen to me. Just as I've said earlier, this is a disclaimer. Everything I'm teaching you here, I won't lie to you, a large chunk of it is coming from videos of Jeffrey in which I watched myself. Video of Jeffrey in which I watched myself. Not even the ones on. Do you know the funniest thing? Most of the videos okay, should I say this here? Let me say it here. There are more content than Sir Jeffrey is even sharing on his YouTube. Unless you follow those videos. For example, the first time I studied structure was actually on Sir Jeffrey's YouTube page, and I told him. And the funniest thing, the day I called him and he directed me to that video. So please try and research more on structures. Don't just research, practicalize everything. I believe we will all be profitable in this market. So I believe that's the little piece I have for everyone, and I believe everyone is able to gain one or two things. So see you guys in the next class, in which I'll be talking about how I navigate my entries, how I do my stop loss, how I make my profit targets, and how I know when the market is about to change from my bias. Do you get it? So I'm going to share that with you guys again, okay? You guys should have a nice time.